All right, what's up? It's your boy. You already know what we on. To be honest, the whole reason of this video is so I could prep for this right here, the Leap competition. It's basically an opportunity of markets with our paper trading competition, earn up to $10,000 in a risk-free contrast contest. And so pretty much it's a contest to see how much yield or return you could get in the span of 30 days. So there's 21 days left in this, John. Um, and there are top five prize pools, and they will win cash prizes of 10,000 in first place, 5,000 second, and so on and so forth. Anyone with their account in profit gets a month of TradingView Premium on them. So we have about close to 90,000 people registered for the contest. We have Quickie Trader in first place with 12% profit. I mean, these top 10, they're doing good. They're doing real good. 22K, not bad at all. Um, right, it brings us right there. Solid. So on the live account, we're going to be using that. And you can see it's $250,000. This is way above my pay grade right now. And so we have to do is that we have to run the numbers again. Okay. Um, and the numbers shouldn't be bad. Right now, I'm going to just put on one screen so it's not as heavy. We're going to transition back to the weekly and really go through what we're looking for. So um, this is NASDAQ. I use ES and NQ, which is well, here, since this is going to be new too, I'll add them. And these are the contracts I'm going to be using. So it's going to be ESU, I believe. So if you go to ES, this is the futures market, the S&P 500 futures market. Right now we're trading the March contract. However, if you take I forgot the website name, bar chart, I think. Then you go to futures. Let me go. It's gonna be this one. Yeah. So it's futures. I don't know which price it was, which one it is, to be honest. Great. But ever you want to find whatever this page looks like, let's make it big. I don't even think you guys can see it, huh? Yeah, you guys can. Hold on. All right. This John right here, as you can see, ESH, as soon as the open interest becomes bigger, we're going to hop on ESM. Right now we're on ESH. Um, and so that's probably going to be next week. I'll add both of them right now. ESH, ESM, and then same thing for NQ. Press that little arrow, find both of these, boom, boom. Because these are going to be our big boy movers. They're 200, no wait, not 200, $20 per handle, yeah. And these are the ones that we want to be trading. So I need that stretch, man. However, let's get to it. So, fresh contract. Immediately, the first things I'm going to be noting are, well, the account size, because trading's about making money, right? So I have a $250,000 account size. Um, what I'm going to do, take this so I can see it. Um, I don't be using that too much. Yeah, okay. Anyway, $250,000, right? 2% of 250K is equal to Grab our handy old calculator right now. It's gonna be about 245,000. Okay, so that's one trade, right? It's pretty gnarly. I don't have to do 2%. I could do 1%, and that's gonna put me at 247.5. And if you looked at the competition, that trading thing, um, you saw that people were not that high up yet, right? So leaderboard, 30K in profit, they're up 2%. So, even like 10% or the 10th place is 22K up. So it's all about if it's a solid setup and how much you're willing to whisper trade. If I want to do a max leverage trade, it's going to be 2%. Camera's right there, not right there. It's going to be 2%, right? And it's 5K. So 5K, I mean, I should be at least risking 2 to 1. I think that that's really solid going into it. That's what I'm going to be trying to do. Um, However, I could go less than that, right? 1% is not bad either. It's going to be these base hits that are going to get me into profit, and profit's all that matters. Break even's cool, but you do not want to lose money in this industry at all. I promise you that. It sucks. It's the worst feeling ever, especially how fast you can lose it. Um, you can also get it back, not back, but you can also make money really fast as well. And so the way that you limit your losses is that you manage your risk of the account, right? So before I was working with like $1,000 account, and 2% of $1,000 is 20 bucks. It's really hard to do, to be a profound trader, a very skilled and talented trader. But with this account size, I can go crazy. I can go absolutely berserk. And the one thing that's going to keep me in check of if I do take, one, two, three, four, up to like 10 losses in a row, this is what's going to keep me in place, in check. So some of the rules of this competition that I'm setting on myself is going to be number one, no more than 2% risked per trade. And number two, no more than 4 trades a day. The reason I counted that is that there is one, two, three, there's 4 key times of the day that I would be willing to trade. That is 3 to 4 a.m. or technically 2 to 5 a.m. But that real sweet kill zone is going to be 3 to 4. Sometimes it happens during the 4 o'clock hour, but these are called silver bullets. These other time zones are 10 to 11 a.m., 2 to 3, and 3 to 4 p.m. So 3, only trade silver bullet and model 22. Any really good rules I should really set? Mm, I mean, okay, just because I say there's no more than 4 trades a day, no more than 4 trades a day does not mean I'm going to take all 4 in a day. But if I do get to 4 and it's tough, guess what? Done. Cut it. Cool. Because usually I'm not trading 3 times a day. So I'll change this to 3 times a day. No more than 3 trades a day, just to limit myself. Because usually when I am pressing that button that much, it's never anything good. Okay. Um, I'm only trading 2 setups, the Silver Bullet and Model 22. And that's about it, man. That's the rules. I mean, I won't trade red news drivers. Those are big news events. And of course, every single trade is going to be documented and it's going to be public for you guys to see, right? I mean, everyone on this leading board, it's public knowledge. Those who can see, they can see. And if I'm going to be on here, you guys can see that and you can see how I did it. I'm not going to live stream any of them. I might live stream them, but we'll see. Um, no promises, that's for sure. But I'm going to walk you through what I'm going to be looking for going into this next week. Um, so next Monday, okay, expires next Friday then. Okay, so we have one more week of this contract of ESH. And basically, we've had a huge expansion upward. Um, this tends to have a nice retracement up. So what I'll mainly be looking at from now is this predominant swing low from this high. I'm going to be watching the midpoint of this, and if we dig deeper into that zone. So I want to see if I can create a, yeah, type retracement. Let's go quarters. Let's take these two off. Can I use a background? Yes, I can. There we go, something like that. I want to change these background colors, but I don't know how. Oh, maybe something like this. We'll do red for the top, and then we'll do blue for the bottom. Like that. Bingo. What's his name? Oh. And then we're just gonna do something like that. And then we're gonna save this. This is this thing called template, save as, um, P and D. And D. And that's just premium and discount. So from this swing low right here, what's the swing low? It's a low that has two higher lows right next to it. That's how you get that low. Extend it. That's where you're going to find it. Um, I don't want to show this number right here, to be honest. Can I see it? Prices. Bingo. I'll turn that back on if I need to. However, there's this imbalance right here. You see how price went exactly to the midpoint of this candle's high and this candle's low, those two ranges. Bada bing, bada boom. And then it found support and ran up higher, up all the way up here. So I like to note liquidity, which is above and beneath old highs and old lows. This is one of them. I'm going to label this liquidity pull all-time high because it is the all-time high. Crazy, huh? And then I'm going to mark this low right here as a sell side liquidity. I'm also going to mark this previous week's low right here, sell side liquidity. As we reach into a smaller time frame right here, you're going to see that these are relative equal lows and something I'm going to be watching going into this next week. Um, other than that, there's a small little inefficiency right here that I think is the main target. So I'll go put these in orange, these two orange lines right there, right in there. So I think our target's going to be 49.34 and a quarter in ES. Um, yeah, run these right here. I don't think you need that anymore. But let's change this into a busy, weekly busy. Do the middle line again, just so you can see there's sell side liquidity underneath it, and 4,666 is candles high. But before that, when we're reaching into this discount, which I think we're going to do in the next couple weeks, is this fair value gap right here. This is a target. Yeah. So in order for that to happen, we need to bleed through the previous week's low, as well as, wait, 2 weeks ago low? Yeah, 2 weeks ago's low, the previous week's low, which are relative equals, and then take out this candle's low, which is a swing low, and overtake this on a weekly basis. Um, this is a weekly chart, so these are just long-term ideas, but this is why I watch, right? So when I drop down to like a daily chart right here, same thing, now just a daily chart. Let me add discount fair value gap right here. Bada bing. That way we can take that Fibonacci off, and we can see again. On a short-term basis, you can see that we had the low on Tuesday, which was the low of the previous week, and then also the week before that's low right here. So those look like relative equal lows. My eyes immediately go to this area right here. So fair value gap from this candle's high to this candle's low. Extend that out. What else am I going to watch? This little gap right here. This is a volume imbalance from this candle's closing price to this candle's opening price. There is a void in between there. That's a volume imbalance. It's a liquidity void. There is no liquidity or price that has been efficiently delivered between those 2 points. And so there has been price being delivered to the downside from this big imbalance right here. Like I said, that's how we define them, from this candle's high to this candle's low. And so what I'm going to do is I'm going to take this candle right here, or this box is high, where I can change it, and put it right here, because this is what remains of this daily busy right here. And so on a short-term basis, this is um, my target. It's going to be 50, 60, and then ultimately 5K, just underneath. So right now it's at 51.29. It's about 129 handles off. Well, yeah, more or less, give or take. And that is ES. Now we're going to switch into NQ on a short-term basis. I'm also going to change this so I can just easily swap back and forth. Same thing. Actually, I'll just delete that. This is what I'm talking about. So I could just go like this, copy here, paste, bada bing, all-time high, bingo. Same thing right here, doing the same thing. Could have just copied that other box, but it's okay. Why am I looking at these? Because the algorithm and what I believe drives price only operates on two things: price and imbalances, liquidity and inefficiencies. Those are the two things I use. Liquidity is above old highs like this, and these relative equal lows right here. There's liquidity beneath those. And so price is going to go to that and through it to raid liquidity and purge it and take out those active orders in the market that are already profitable long here. And that set their protective stop losses beneath these lows because they thought that this was support. You'll see how much their support helps them. And then also you'll see that if it's going to go to there, where is it likely to head to? Well, imbalances is another one. This candle's high to this candle's low. I'll draw it back up right here just to see. If I use that, then this is the actual imbalance I'm watching. This is another classification of an imbalance right there. And I'll change this one to blue. All right. this candle's high to this candle's low. There's a void in between those two. It's not, what's the word for it? What's the word for it? It's not efficiently delivered. There's no, yeah, there's two words. That's why I didn't find it. Um, it's not solid back and forth price action like there is right here. You have nice and balanced price action back and forth. There's no gaps, no voids in that. This is a imbalance in price, as well as this right here. You see how these jump out on the screen versus this stuff right here? And so the way I see it is there's a retail bull flag right here. Bada bing, bada boom. Something like that. They expect price to go up higher. See price go down, leave relative equal lows, come back up to take out these candles relative equal highs right here, especially this one as well. And now we're going to be on our way right back down to this candle's low. Okay. And so first target is right here, these relative equal lows, and the other half, as you see how price delivered right to the consequent encroachment, which is just a fancy word for the midpoint of this BISI, fair value gap. A BISI is just a classification of the fair value gap. This is a fair value gap. This candle's high to this candle's low. That is a fair value gap. This is a fair value gap as well, just in the form of a SIBI, not a BISI. BISI is to the upside, SIBI is to the sell side. Yeah, sell side. Downside, same thing. That's how I remember them, BISI and SIBI. BISI, SIBI. Buy, sell. And yeah, we'll see where Monday's opening price takes us, but that's what I believe price is going to be doing. Yeah. Okay. With that being said, I think the last thing I have to cover is how I'm going to be gauging these. So each one of these is 20 bucks now, meaning, let me take a water break and think about it real quick. Okay, so my goal every trade is to net 20 handles. 20 handles times 2, actually times 20, equal to 400 per one contract. 400 times 10 is equal to 4K. And so each trade I take, I'll probably put on 10 contracts instead of just one, because my risk management, if you remember, scroll back. Yeah, wait, no, you're watching, so I'm looking at. Scroll back in the video over here-ish, yeah, and go see that my risk management was 5K per, why am I saying that when I can just go like that and then go like here? Bada bing, cool, no more than 2% per trade. So here, go back here. My goal is to net handle 20 handles. I'll be able to do 10 contracts um, just to get to 4K. Meaning, what can I risk? Wait, no. All right. Max handle stop loss is 15 handles.
we're gonna do that. 15 times 20, it's gonna be 300 per contract. 300 times 10 is 3K. So I'll be able to do 15, I think. 15 is going to be 4.5K. Which is getting me just to about that 5K level. Like $500 less. And so I could put on 15 contracts, meaning times 15 is about what, 6K? Yeah. Yeah. And then of course I'm gonna have runners. Runners. How many runners? I'll keep 5 of them. Usually my stop loss won't be as much as 15 handles. It'll be around 10 to 12, maybe like 13, 14 tops. Um, and so that'll save me some money. But yeah, you'll see me go in willing to just do one-to-one risk scenario trades because I am confident in where price is likely to head to, and I trade in that direction. So, with that being said, welcome to the leap. I'll mark every trade, trade one of the leap, trade two of the leap, and then I'll do the description of what it is and why I got in, what I'm doing. So that's all from Slim Trading, BSU Trading. I'm out.